I guarantee no one's seen this coming on the channel. Wendy's has arrived. Now, for a lot of you may have experienced Wendy's on a trip to the US, and they've actually opened a few ones in the UK. I myself, it's one of those ones I have yet to have the experience of having a Wendy's, whether that's a good thing or a bad thing. It's mixed reviews like any fast food place, but they are a really good dividend pair, and we're going to have a good look into their company today. Now, I do want to point out that for anyone investing from the UK, this is not financial advice, it's just points that have been made in previous videos. Due to the pound being very weak against the dollar, and of course the 15% withholding dividend tax on UK owners of US stocks, there's just a few extra factors one must consider, especially if you're in the UK investing in the US. If you're from the US, you can ignore everything I just said. We're going to have a deep dive into them. Alright, so ticker symbol WEN, traded on the NASDAQ, Wendy's Co. It is an American holding company for the major fast food chain Wendy's, headquartered in Dublin, nope, not Ireland, Dublin, Ohio. And they employ over 10,000 employees, revenue of 1.4 billion, and I think almost 1,000, they've at least 1,000 abroad shops or, fast food joints, and probably equally that at home in America. Now, their stock price it's had its ups and downs. I'm actually going to do the last 5 year. You can see they were trading at about $21, and they had a massive plunge of nearly 50% in March of 2020, COVID of course, down to $10.94. They had a wee bit of a very, very fast recovery. Probably people noticing that fast food chains, most of which swapped and drive-through, and they implemented measures over COVID. They survived, they got through it, like McDonald's and Burger King. And here we are at $19. Dividend yield is sitting around 2.68%. We'll double check in Simply Wall Street to see if that is the case. And let's jump right into it. I'm going to have a lot of fun looking at Wendy's. They are, and I do want to point out, a lot of you may know Wendy's if you've never had one from their Twitter. They actually were one of the first companies to start this trend where companies would post funny messages to other companies and, popular tweets, and Wendy's led that pretty well. I remember constantly seeing memes of Wendy's, and they were really good at marketing. So marketing masters in that regard in the Twitter sphere. How much good that did to the company, I'm not too sure, but, pretty good to see. It was innovation at the time. This is their UK website. So obviously they do burgers, they do fries, and they are continuing to open a lot of stores in the UK. I think they have plans for about 50 this year. I don't know how many have opened, but just like Tim Hortons, they've experienced a rapid growth in the UK market. I think they're aiming for about 400 to 500 stores in the UK alone. You can find them in Reading, Stratford, Oxford, Croydon, Brighton, Ilford, Camden, Romford and Maidstone. Hopefully I pronounced most of them right, but yeah. Of course, this is just their menu and finding jobs. Breakfast combos, sandwiches, sides, coffee, hamburgers, chicken burgers, fresh made salads, Frosties? What are these? Oh, right. There, I bet you some of these would be nice. I'd love to see one over here in Northern Ireland. We've only just experienced the likes of a Tim Hortons, a McDonald's, and a Greg's relatively recently. So I'm hoping Five Guys as well hasn't been around all that long over here. So we're catching up. We're catching up in the rest of the world and enjoying every one of them. I've been to all of them. I own shares in Greg's. And I don't know if Five Guys have a stock price, but we'll be looking at McDonald's as well. But this video is mainly concentrating, of course, on Wendy's. Now, Wendy's, this is their corporate website. Very useful for looking into anything investor related. You can see their financials. We'll have a look at a few things here. Their stock information, purchase stock, dividend history, event and presentations, and then who we are and what we value. I want to see what they value. Well, maybe I'm being silly. Why is it not letting me? Something about the UK websites. It keeps wanting me to throw over to the UK website. Can I not do that? Anyway, Dave Thomas. Oh, nice. Shares my name. Thomas, not the Dave. I'm not called Dave. Opened the first Wendy's store in the unwavering commitment to serve fresh food at a fair price in a comfortable atmosphere. 50 years later, doing the right thing in the right way is still what guides the company and our corporate approach. Good done right. It's a catchy wee phrase. Okay, I do know a lot of you are probably thinking this is quite low on the thing. Let me just adjust this. Let's go. Who are we? There we go. Okay, it seems to really want to send me to the UK website, but I need to read this. So, brand assets. So we heard you want to talk about us. Well, we hope you have nice things to say. Either way, for the sake of your content and our pride, we'll provide the high quality images and other assets for your use. Oh, that was handy. Who we are. We are Wendy's kind of people. You can see the history, becoming a franchisee, investing in quality. Restaurants around the world, of course, they are very international. International franchising is how they've been able to expand so rapidly, and our global growth vision. And we believe in quality inside and out. So I've got a good idea of who Wendy's are. So let's jump over to Simply Wall Street. The snowflake analysis here tells me that Wendy's, they haven't scored well in financial health, past performance. They're all right in future, very good in valuation at the moment, and all pretty good on dividend. An undervalued average dividend pair. Trading 38% below estimated fair value. Now, that is with a discounted cash flow model. We will be looking at intrinsic value on alpha spread. Earnings are forecast to grow 11% per year. That's pretty good. Trading below calculated fair price to earnings ratio. And analysts are in good agreement that it's going to rise by 24%. Now, problems here. Risk interest payments are not well covered by earnings, and they have an unstable dividend track record. That was mostly due to COVID. We'll look into that more in a second. Okay. Down to value. Oh, who do they say as competitors? Wingstop, Texas Roadhouse, Papa John's, and Cracker. Well, I'd also say McDonald's, but you do use Simply Wall Street. Pay ratio of 22.2. I'd say that's pretty common in the... Wingstop's 93. Damn. Yeah, it seems pretty... Their average is about 39 in peers, but that's including Wingstop. Let's see, is there anyone here we would sort of recognise? Yum Brands. Let's see, where would McDonald's be on the pay ratio? Pay ratio for McDonald's is actually... They're 27, Wendy's is 22. So that's probably the better, opponent to put against them. So it's not bad at all. Down here, currently trading, as I said, at $18.69. Fair value, they reckon, is around 30, but we'll see if the intrinsic value lines up with that. Just in discounted cash flow models and intrinsic value, it's just different ways of looking at the company. They all come to usually averaging the two out and using a bit of common sense, and then again, you also don't really know what's going to happen into the future, so it's a lot of things to consider. However, future growth for Wendy seems to be pretty good. They seem to be picking up quite well, and they're projected to grow both their earnings and their revenue into the coming years, despite the looming chance of recession across the board. Past performance, it's down 8%, but that you can't really include COVID. They were doing quite drastically. They were doing very well in the 2018, 2019, and COVID obviously had a bit of a negative effect. Free cash flow still maintains pretty well. Okay, down to financial health. This is where things get a bit spicy. Short term, they're grand. Long term, not so much. They do have quite a high level of debt. However, I believe that's considered quite usual in the fast food industry. That's just the way they are. It's very low profit margin, and that is the fast food industry. Now, it is technically covered by, they've a lot of assets, physical, long term, they've cash, they've receivables, so I'm thinking the debt's not too bad. It does say it's not covered well by cash flow, and the interest payments aren't covered well either. So those are things definitely to consider when you're looking into a company. As with the dividend, 2.68%, pretty accurate compared to the Google one. They have been growing their dividend per share. Don't look at the dividend yield so much. You can just see this wee turquoise line, dividend per share. Perfect. I can pronounce things. It dropped a bit in 2020. They still continued to pay the dividend though, and they've actually grown it to pre-pandemic levels, and it looks like they're on course to grow it even further. That's pretty good. Earning payout to shareholders, not bad, and cash payout, again, not bad too. Down to ownership here, we can see who owns most of them. Vanguard and BlackRock and the Trian Fund Management. Food for thought. Okay, over to Dividend Max. Now, the thing about Dividend Max here is Wendy started paying in 2012, and they've been growing their dividend ever since. Dividend per share, that is. Had a wee drop in 2020, but as we know, they recovered in 2021. Let's see, when is their next one? 30th of November. Declaration date is only a few days away. Okay. We'll see if they're paying more or less. If you had 100 shares of Wendys, though, which would be about $1,800, you'd have got a payment of £12.50 or $12.50. They pay 4 times per year, so every 3 months. And yeah, as you can see, just again, things I like to stress is they are growing their dividend per share. It's a very important aspect for any dividend investor, is to see, well, what's the dividend per share? Dividend yields can go up and down depending on the stock price. Dividend per share is where it's really at. Okay, so I know I didn't sign up to this, so alphaspread.com. Let's go. Alphaspread, I would like you to show me Walgreens Boot Alliance. Will actually be in a future video, and I've already done reality, so we want Wendys. Give me Wendys. Let's see, they are 23% undervalued in terms of intrinsic value. Worst case, they're 10% undervalued, and best case, they're actually 44%. The best case is $24. Now, this does take into account a lot. It's a massive variation. And the other, it's saying here, the other way of looking at it is a discounted cash flow model, which is what Simply Wall Street uses. So combining the two gives you a really good idea. So yeah, don't take them as gospel though, but do take them as definitely a good thing to see. Over on Trading 212, the stock brokerage that I use for all my videos and portfolios, I will be having a US portfolio very soon. Will Wendys be in it? That's a very good question. I know I said Realty Income will definitely be in it, but at the moment, because of the pound and whatnot, I'm wondering, I will be building the portfolio theoretically before I actually put money into it. So Wendy's definitely a contender. Will they stack up against the likes of McDonald's and a few of the other competitors that I'll look at? Only time will tell on that one. But yeah, definitely at the moment, their stock price is, well, they have been up at sort of $24. So the intrinsic value, you know, has clearly showed that they haven't really went beyond $24, but they have went as low as 10, so that's something to bear in mind as well. It does give you a wee bit of details on the company. They operate through 3 segments: Wendys International and Global Real Estate and Development, the US segment, and then they have the international segment. Nice. Oh, you can actually see here, they operate 5,938 restaurants. Woo! In the US alone. And then 1,000 abroad. Most of them are actually owned by the company. 403 were operated by the company, and 5,535 were operated by approximately 228 franchisees. So most of them are actually franchised out. Food for thought there. Yeah, and you can see market cap. He gives you a bit of information. You can see the revenue and income and their profit margin, 10%, total assets and liabilities, and then they are very cash heavy generating business, which is great for dividends. So again, another thing to think. Will Wendys be in your portfolio? Let me know what you think in the comment section below about the company and the video, and if there's anything you want to add, I will certainly be up for hearing it. I love chatting these in the comment section. Thank you for joining me throughout this video, and I'll see you all there. Bye bye.